Good evening. Welcome to Financial Fridays, brought to you by Marshall Davis Ministries. I'm your host, Elder Alonzo Hinton, and we have a great show for you this Friday. We have our mortgage refinancing expert, Marvin Lindsey. Marvin Lindsey is waiting for us in the queue. But before we get started, we're going to talk about 6 retail stocks to buy for bets on sale growth. Normally, we do this at the end of the broadcast, but today, because we have a guest and I'm sure you guys will have questions, I want to go ahead and get this out the way so we can go ahead and have any questions. We can ask Marvin any questions that we may have. So once again, 6 retail stocks to buy for bets on sales growth. So these stocks are because, with COVID, with the COVID vaccine going out, we know there's a lot of questions about sales and sales that were pumped up online. Will the growth of those particular stocks continue to go forward? So we've done a little research and we found these 6 stocks that'll continue to provide great growth once the COVID pandemic continues to go away. So the 6 stocks we have listed are, as you see on the screen, Victoria's Secret. The male staple is certainly in the recovery basket, and while it had a difficult time at the start of the pandemic, it has since reported strong earnings and holiday sales. And then Tapestry, number 2, it has pricey handbags marketed under Coach and Kate Spade brands. They weren't in much demand during the lockdown, but many think that will change quickly with the economic reopening. And its most recent earnings report was already better than expected. Then we move on to Dollar General, which is 3rd on the list. This stock trades at 19.6 times forward earnings. They had a great 2020, although there was a slight decline in same-store sales. It's an environment where consumers can seek out bargains. And then Kroger, we know what Kroger is, grocery stores and consumers. In 2020, consumers kind of stocked their pantries at ate at home more, but supermarkets are in a category that some investors worry about may be on a decline, but they feel that Kroger is going to continue to go up. And then finally, Best Buy, it rounds out the group. Working and learning from home fueled a surge in consumer electronic demand during the pandemic, which led to strong earnings. Some think that Best Buy will continue to grow as people will continue to buy electronics. So there's our stock tips for today. So now we're going to move forward with our guest, Marvin Lindsey. Marvin Lindsey is our mortgage refinancing expert. I hope you have all your questions ready. I'm sure this is going to be a fantastic show. How are you doing today, Marvin?
I really can. Can everyone hear me?
Yes, we can hear you. Can you hear me?
I can't hear anyone. I can't hear you, Alonzo.
You can't hear me? Is the volume up on your machine? Did you test the volume on your machine, on your laptop or your phone? All righty. So do we have him? We're having some technical difficulties right now. If we are having technical difficulties, I am going to.
I can hear you now.
You can hear me now?
Yes,
Great.
yes. I'm sorry about that.
That's okay. We got you. We here. I know people have a lot of questions for you, and I'm really excited to have you on today. I sent you an article earlier.
Yes.
I want to share that article with our audience from businessinsider.com. It's yesterday's article, and it talks about today's mortgage and refinancing rates. This was dated February 18th, 2021. And it goes on to talk about how mortgage and refinancing rates have actually ticked up since last Thursday, but they remain at striking lows. And you can see the rates right there. And they recommend that you might want to think about a fixed rate mortgage instead of an adjustable rate mortgage if you're ready to buy a home or ready to refinance. And then Matt Ishaba, CEO of United Wholesale Mortgage, told Insider that fixed rate mortgages are currently a better deal than adjustable rate mortgages. Tell me what you think about that article, and do you think though that was an accurate statement made by the CEO of the United Wholesale Mortgage?
It's a very accurate statement because there's so much volatility going on right now.
Okay.
So, and besides, if you can get a mortgage rate under 3% right now, that's unheard of.
Okay.
So it's definitely, and you have the certainty, whether it's 10, 15, 20, 30 years, you have that certainty of a fixed rate under 3%. So it's definitely very accurate.
So then explain the difference between an adjustable rate mortgage and, I guess for lack of a better term, a fixed rate mortgage.
Okay. An adjustable rate mortgage is based off of 30 years,
Okay.
but it has a certainty of maybe 3 years, 5 years, or 10 years,
Okay.
and even a 7 year, where the rate would be fixed for that period of time, and then it would adjust to today's market.
Okay.
So you could be at 3% today, but 5 years from now you could be at 7%.
Okay. So why would I get an adjustable rate mortgage or ARM as opposed to a fixed rate mortgage?
Well, you would do that if you know you're going to be in a property for a short period of time.
Okay.
If that's going to be to your advantage, if you know you're going to be in your property for 5 years at 1.5%, of course you're going to take advantage of that. But
Exactly.
if you don't have that certainty, then the fixed rate is the best way to go.
Right. Okay. Great. Fantastic. So we're going to scale back a little bit because we really don't know you here on Financial Fridays.
Right.
So tell us about yourself, your career path. How'd you wind up where you are? Tell us about your family. What do you do for fun? And did you grow up in Chicago?
No, I actually grew up in Joliet.
Okay. And then tell us how you made it to Chicago.
All right.
Yeah,
Usually,
Chicago area. Chicago.
okay, I've been in the mortgage business for 23 years now. I started off on the broker side, which was the place to be 10 years ago.
Okay.
But now with all the regulations in place, it's best to be either with a credit union or a bank.
Okay. So tell us what was going on 10 years ago that you said that was the place to be. I might know what's going on, but everybody else might not know what was going on 10 years ago.
Well, 10 plus years ago, you could set your own market.
Right.
It was pretty much a free for all. It was good and it was bad. It all depends on your moral character, to be honest with you.
Yeah.
But then the market crashed.
Right.
And then
The housing market crashed.
yeah,
Yes, the housing market crash. Yes.
and then all the regulations were put into place.
Right.
And a lot of the brokers went out of business.
Okay.
So now, even though the banking industry is very good, on average, you're paying probably about 0.25% higher than it would be on the open market.
Okay.
So it's good. There's more certainty in the banking and credit union industry than it was before.
Okay.
But all in all, I'm happy with the changes that were made.
So 10 years ago or 15 years ago, however long the time period was, it was less regulations. So people would go outside of credit unions and banks to get their mortgage. Is that what you were saying?
Yeah, that's what I'm saying. And then it was what you would call the subprime market.
Right.
A lot of the customers were being charged up to 10 points on a
Right.
loan. So you can't do that anymore. So, and I never did that personally, but it was just stuff that was going on in the business.
So how did that, because I want to kind of lay a foundation, how did that affect people where it caused the housing market to kind of crash? Specifically when we talk about African Americans, how did it affect us, the subprime loan part?
Well, the subprime loan part it's several different ways. If you could get a loan with a low credit score, let's say you had $100,000 loan, the loan officer was going to probably make $10,000 off of you.
Right.
So that's $10,000 extra on your loan that you're paying for at a higher interest rate.
At a higher interest rate.
Right. So that's how it really affected the. They're not saying that only African Americans had bad credit, but a lot of things were happening in our community that we weren't aware of.
Right. And this is why we have Marvin on today to kind of explain to us what happened and what information we need to have now to make sure that we aren't being taken advantage of. Go ahead. I'm sorry for interrupting.
Oh, no, not a problem at all. Now, let's take 10 or 15 years ago, one of my niche products, I was doing bankruptcy buyouts.
Okay.
It was subprime, but it was also giving people a second chance.
Yeah.
And that's what I was more about. So I could take them out of a bankruptcy and then 6 months later put them into a conventional loan,
right,
at a much lower rate. So one of the things in the mortgage industry is you don't have residual business.
Okay.
So what I try to do is provide a customer service where if you bought a house today, 5 years from now, you'd come to me because you knew I was going to be straightforward with you.
Right.
Everything.
Fantastic. Fantastic. By residual income, you mean once you're done with that customer, you're not getting any type of income from that customer anymore.
That's correct. That's
okay.
Correct.
Fantastic. So those interest rates, you talked about the interest rates and you got them into a more conventional loan. Were those interest rates so exorbitant that it caused people to not be able to pay their mortgage? It was too high. What was going on?
No, on the loan type of loans that I was doing, you had a bankruptcy payment and you had a mortgage payment.
Okay.
So I would cut that in half.
Okay. Right.
So you would have just the one payment.
So you were helping save homes. You were helping people save their homes.
That's correct. Yes.
Okay. Fantastic. So now this is the time you can tell us about yourself, how you got to where you are, to your family, different things like that, what you like to do for fun.
All right. My family, I'm actually a divorced father of 4.
Okay.
All my kids are adults now. That's a good
that's amazing, isn't it?
But I have 6 grandchildren also.
Right.
So, that is a unexpected pleasure that I've gotten. I get to spoil them and send them home. So,
I know that's right.
But I ended up with U.S. Bank. I was working for Chase, and then I went through some family, some personal tragedy. So I took a little time off, and I returned back to the mortgage industry through MB Financial. A month after I got there, they were bought by Fifth Third. Okay. And we weren't guaranteed jobs, and I got a call from U.S. Bank, and I've been there ever since.
Okay.
I've been covering the Lockport branch, Evergreen Park branch. Okay. And then a few other locations I'll get, for a month or two, and then they'll hire someone else, and then someone else will cover them. But those are my main branches. For fun, I like spending time with my family.
Great.
That's the best thing. And I'm also a trustee and an administrative counsel at my church. So,
fantastic. Great. Fantastic.
That's pretty much it about me. I mean, I'm a simple person.
Okay, that's great. That's great. Well, you're a family man. You're involved in church. Obviously, you like helping people financially. So that's important to you. Do you find that that you wind up giving a lot of people in your church financial advice? So they come to you, do they see you as a financial leader or someone who can help them financially?
Yes, actually, before COVID, during every 5th Sunday during the month or throughout the year, we'd have a financial Sunday during our Sunday school class.
Okay. Wow.
So I would speak that, and then we also have a county board. The finance director of Will County is also in that class. So we would go back and forth and tag team on, different aspects on credit, mortgages, different things, investments,
Right.
just, to expand our community.
Exactly.
Uh,
Okay.
that those were the things that just building a foundation, not just I don't look at a customer as just a paycheck. I look at it as a relationship building,
Right.
and that's the most important thing.
So how do you maintain that relationship? You say you do look at it as a relationship. How do you maintain that relationship over the long term? Do you call them occasionally, email? What do you do to maintain that relationship?
There's I there's a 6 month and 1 year anniversary on
Okay.
every loan that I do,
Okay.
and then there's birthdays
Okay.
and
Right.
any other information I can pick up along the way. Any excuse to pick up the phone to give a call to them and just
Right.
make sure
Fantastic.
that everything is going well.
Right. Fantastic. Fantastic. So have you found that avenue that you use to reach out to your customers helped during COVID?
Um, yeah, it does. It just gives everyone a chance to vent during this time.
Yeah. Important.
Because I mean, me myself, I struggled the first couple of weeks having to work from home.
Yeah.
And I find it when you find a link with someone else going through the same struggles, then and then it's always good to have a relationship with God during all this time, and then when you can find like-minded people,
Right.
um, that's really the best way to look at it,
Okay.
But and one of the other things is throughout the 23 years, I have numerous of people I've done 4 or 5 loans for
Right. Wow.
because of the customer service.
Okay.
I look at it this way: you have a doctor, you have a lawyer; those are people you go directly to. This
Mm-hmm.
is your biggest investment for most of us.
Yes.
Why
Yes.
talk to 10 different people about that?
Yes.
You
Exactly.
should have one person you trust in that location.
So you said you talked to people, you've done 5 or 6. This is kind of getting off the path of our question, but I think it's important
Okay.
people that people know what you can do for them. So you talked about that you've done 4 or 5 different mortgages for one specific client at different
Right.
times.
Right.
Tell us what type of mortgages you can help people with. We know is your title mortgage loan officer? Is that what they call you at
Well,
US?
I'm actually a supervisor with a mortgage loan supervisor.
Okay.
So
So
I am a loan officer, but I have people who I'm not going to say report to me, but I'm their
say
advisor
that. You can
also.
say that. That's not. You can say that. That's not being. That's essentially what they do. They report to you, right? So
Right.
go ahead and
Yes.
say there's nothing wrong with saying that.
Yeah. But and I just try to just lead by example
Right.
instead of looking at a title under my name. I just try to lead by example with everyone.
Okay. So
And
so go ahead and talk about. You said 4 or 5 different products or loans. How, for example, explain some of those loans to us that you've helped one person with.
well, I had a situation where a couple, they had a property and he wanted to buy another property downtown, a condo.
Okay.
So I did a cash out refinance for him, and he paid
Okay.
cash for the condo downtown.
Okay. So
Uh,
before you move on, I want you to explain what a cash out refinance is later. Let's remember
okay,
that. Keep
okay,
going.
all right. So a couple of months later, they decided they wanted a vacation home in, I believe it was Minnesota,
Okay.
and so I arranged the financing for that. Um, then they came back to me because they were selling their home, and then they wanted another permanent home. It was in another state, and the thing I feel best about that is it was in Tennessee, as a matter of fact.
Okay.
Um, the realtor in Tennessee didn't want anything to do with Chicago.
Wow.
So, but my client said, we're not buying the house if he can't do the financing for us.
Right.
That's probably in the 23 years, the moment I'm most proud of, because that shows that I gave them customer service and I was there for them each step of the way when they needed me.
Okay,
And
fantastic.
I mean, that's what it's all about. And when I say residual income, I don't have residual income from their monthly payments, but I get residual income by doing a good job for them
Exactly.
step by step.
Exactly. Exactly. Fantastic. I'm glad you brought that point up. So let's get back to specifically refinancing. So what are good reasons for refinancing my mortgage? A person,
Well,
yeah, go ahead.
to save money on the
Okay.
monthly payment.
Okay.
That's you. I came across several situations throughout the years where you buy a house, let's say at 8%,
Mm-hmm.
then the economy improves. I'm sorry, going rate is at 6.5.
Mm-hmm.
Then that's going to be to your advantage to do a refinance, save you $150 a month.
Right.
Not necessarily worrying about going back to the original term because you're saving money during
Right.
that period. The other type of refinances is shortening the term.
Okay.
Um, that's been really popular here lately because if you have a mortgage at 4.5%, 5% on a 30-year,
Mm-hmm.
and you can get down under 4, under 3, it's well worth it. Not only that, if you take that 30-year down to a 20-year after you've been in the property 3 or 4 years, you're not only saving monthly, you're knocking off 4 or 5 years off your mortgage.
Yeah. Which is fantastic.
Right.
So we talk about percentages. So what's a good percentage for me to look at if my percentage is a certain percentage? Is a half a point even worth it, or should I look at it be a whole point? What's worth me refinancing my mortgage as far as a percentage point?
A half a point really doesn't do much.
Right.
I actually broke it down a little bit earlier today. On a $100,000 loan, you're only going to save about $30 a month.
Yeah.
On 250,000, it's maybe $75 a month.
Right.
The biggest thing you want to look at with your savings is you're going to see, can you recoup your costs within 2 years?
Okay.
Then it's worth doing.
So you would help them go through that process of determining whether they can recoup their funds?
Yes. Now, with my company, our closing costs are roughly about $2,000.
Okay.
So within 24 months, can you recoup that $2,000 on your monthly savings?
Okay. Now that makes sense. That
yes.
makes
So if you can do that, it's well worth it.
right. Okay. Fantastic. So I can look at if 2000, okay, that sounds great. That's pretty straightforward. That's pretty simple. I think we all have can understand that. You were
Right.
about to say something else?
No, that was it. Now the other thing is shortening the term is really been the biggest one that we're doing now.
Okay.
Because like I said, if you can take a 30-year down to a 20-year or even down to a 15-year, even if your monthly payout is like maybe you're paying $50 more.
Right.
But if you're knocking 5 years off, that $50 is well worth it.
It's well worth it. It absolutely is. It absolutely is.
Because you're saving tens of thousands of dollars in
over the life of the loan. Yep,
Yes.
over the life of the loan. You're absolutely. That was going to be my next question. When you knock down some years and keep your monthly mortgage the same, so it generally is the same or a tiny bit more expensive.
Right. Yes.
Okay.
It could be a little bit more expensive, especially if you're going from a 30 to a 15.
Right. That makes sense. The math makes sense. Okay. Fantastic. That's great. That's some good information right there. And then in your mind, it kind of gives you some relief because you're figuring as opposed to paying off this mortgage for 25 more years, I'm only paying it off for 10 more years or 12 more years or something like that. So you can see the light at the end of the tunnel quicker
Right.
which will kind of relieve your mind a little bit. That's great information.
Right.
So,
Now, one other thing, if you allow
go
me,
ahead.
just one other thing. If you're looking at like a half a point difference in the interest rate,
Mhm.
and you're looking at $2,000 in costs, you'd be better off paying $50 to $100 more per month
Right.
to pay because that'll go directly towards principal,
Exactly.
and you'll knock the years off a little quicker without having to come out of pocket with money.
Okay. Ooh, wow. That's good right there. Let's say that again.
Okay. You'd be better if you're looking at just a half a point in
Mhm.
savings or off the interest rate. You'd be better off paying $50 to $100 more per month, which goes directly towards your principal.
Right. And to help you pay off your loan faster.
Faster, yes.
That's fantastic. That's great information. So what are the different options for refinancing?
Different options: rate and term or cash out,
Okay. So what does that mean? Explain that to us.
or shortening the term, which we just went over.
Okay.
A rate and term is you're going what you owe. You're refinancing just for that amount,
Okay.
generally to lower your payment. Lower your payment. Yes. If you do a cash out refinance, you have to have at least 20% equity.
Right.
That's the ceiling that you can go up to is 80%,
Okay.
and you can take the cash out for any purpose, pay off credit cards, pay off a car, anything, home improvements.
Okay. So are people doing more at this point in time during COVID? Are people doing more lowering their payments or cash out options, or is it 50-50? Which one is it?
It's probably about 80% just lowering the payments.
Wow. Okay. Okay.
Um,
Has that changed during COVID, or has that been a trend over the last, let's say, 5 years?
it's changed during COVID because actually most banks cut the maximum loan to value on cash out during
Right.
this time. It's just now moving back up to 80%.
Okay. Okay. Fantastic.
One of the other options that's available, which is very popular, are the HELOCs.
Okay. And what's a HELOC?
A HELOC is the same as it's well, not the same, but you have the same max LTV on the cash out,
Mm-hmm.
but it's more or less like a credit card where
Okay.
you have a 10-year draw period. Sorry about that. It's a 5-year draw period,
Okay.
and then at the year 10 you start paying it back.
Okay.
And it most mimics a credit card.
Okay. So that
Where you
payment,
only pay what you owe on what you use on
so
the.
that payment will be added to your mortgage, or that will be a
No,
separate.
it'd be a separate payment.
Okay. All right.
It'd be a separate payment.
Okay. And that happens at you don't start paying it back until year 10. Is that what you said?
No, you start paying it back right away. Let's say you have a $50,000 limit,
Okay.
but you only use 1,000.
Okay.
You're only paying on that 1,000.
1,000. Okay.
But then you have that 10-year period where you can draw the money.
Okay.
And then at that point, you start amortizing that over the next 20 years to pay back whatever you have on the card.
Oh, okay. I got it. Okay. That makes sense. Okay. Wow. Fantastic. So I was doing a little research, and I saw something that said no cost refinancing. Is that a real thing? No cost refinancing, or is that just something to get you in there, get your attention, have you calling people?
It's funny you say that because I just did that for my best friend, right? And he's like, "Well, why are these charges showing up?" Oh, yeah, you still have the charges, but we're eating the charges with the rate.
Okay.
So if it's a no cost loan, but
Okay.
let's say if today's rate is at 2.5, we're going to give you 2.75
Okay.
to pay for the cost of doing the loan, and that's just like an average. It all depends. Also, the size of your loan.
Right.
If that loan size is only 100,000, you may be looking at 2.75 to 3% on your interest rate.
Right.
As long as there's enough premium to pay back the cost of the loan.
Okay.
And while we're on that, you also have to realize something too. The difference in the payment on that is maybe $20, $25.
Right.
So would you be better off just
Putting that
paying?
on your mortgage, like you said.
Yeah.
Putting that on your
Yeah.
principal. Exactly.
Right.
Okay. Fantastic. So let's talk about that, since you that's the second time you brought that up. If I decide I want to pay my loan off earlier and add an extra 50 or $100, do I have to designate that particular amount toward my principal, or can I just send it in? Will they know anything over the amount they assign is supposed to go to the principal? How does that work?
Yes, any money that's sent in extra goes directly towards principal.
Okay, so that's automatic. So I don't have to
Automatic.
worry about calling anybody or doing anything else. Okay,
No.
fantastic. That's a great question. So here's another question. I know people have a lot of questions. We have people, a lot of seniors who listen to our show. So what's the difference between refinancing a mortgage and a reverse mortgage?
Okay, now that I'm not really well versed in reverse mortgages.
Okay.
What I do know about them is generally it's almost like a cash out refinance,
Okay.
except you don't pay it back.
You don't pay it back?
No, you don't pay it back.
Wow. So that's a legitimate option for people who have paid their mortgage in full.
Yes, it
So
is
how
legitimate.
So how do the people who are providing these reverse mortgages, how do they get a profit? Do they own the home now? What happens in that case?
They own the home.
Okay.
If something happens to if it's two borrowers, both borrowers, then they own the home.
Right.
And they can sell it. And
okay.
I mean, it's long-term money is what they're looking at.
Right.
Because generally that house is going to increase in value.
Right.
They've only given you 75 to 80% of the today's market.
Right. Wow.
So it's a good idea, but it's not a good idea if someone is looking to inherit a property.
Exactly.
Because then they would have to come up with the money that's owed.
Okay.
I mean, I've never done one, so I don't.
Right. Okay. So once again, we're talking to Marvin Lindsey, mortgage loan supervisor. Contact information. If you need to contact him with any questions, you can reach him at 815-274-0166, 815-274-0166. And this is the last question that I have. I don't know if we have any questions in the queue from any of our listeners. If you had $50,000 designated specifically for your business, how would you spend it?
Definitely on advertising.
Okay. How important is advertising? What type of advertising? Online? What type of advertising?
Well, it would be definitely online, radio.
Okay.
Anything to get my name out there.
Right.
And throughout the years, particularly with the broker companies I work for, that was the lifeblood.
Right.
It's just having radio advertisement. It's very important. Even at the bank, I go over and above. I have a website that I pick up 2 loans a month.
Okay.
Just by having a website, and anything I can do to go over and above. We just started a process right now where I can pick a realtor and whatever area they want to work in, we'll do I think it's a $5,000 mailing to them.
Wow.
And company cost. So of course I'm gonna take advantage of that,
Right.
But if it was just my own, I would get my name out there as much as possible.
Right. Okay.
You can never be too busy.
Yeah, I know that's right. So do you do? So can you potentially? I know you are assigned an area, right? You assigned an area. You said Lockport, and then Evergreen Park. I think that's how I contacted you because I live close to Evergreen Park. What if somebody who's listening to this in Mississippi called you and said, "Hey, I saw you on Financial Fridays. I'm interested in refinancing my mortgage, or at the very least, I have questions." How would you assist that person, and how would the conversation go?
Oh, it would be pretty much the same as anyone who's living in Chicago,
Okay.
provided they had an email address,
Okay.
because we're paperless on everything that we do.
Okay, great. So
So,
you're limited to the areas that you assign to.
right. The only, I can't do loans in New York or Texas.
Okay.
And that's a company policy.
Okay. Okay. That was
Uh,
going to be the next question I asked. Okay.
mhm.
So we have our listeners out here, our viewers out here. If there was one thing you wanted them to know, what would that be?
Don't believe the advertised rate you see.
Okay. Wow. Why is that? You got to explain that. You're going to have to explain that.
90% of the callbacks I get from my clients is, well, this bank is offering this. Well, okay, we can offer that too. If you read the fine print and see you have to pay 2 points for that rate.
Yeah.
So that's probably, and that goes for whether it's a mortgage loan, a car loan. Everybody's going to show you a teaser rate.
Right. Just to
But
get you a call.
yeah, just to get the phone call. But then
What?
you have to read the fine print and look at, well, you have to have this credit score. You have to have this much money down. So that's really like the biggest thing and I have a smile on my face every time I respond to those,
Wow.
just because I know what it is,
Right. You know the business. You've been in it for a long time.
Right. Yeah.
Okay. Fantastic.
But I also would look at anyone, whether they do a loan with me or with anyone else, look at your recovery.
Okay.
On the what's being charged to you.
Okay.
And probably the last thing is that escrow is not a closing cost.
Okay.
That's really the biggest cost on doing any loan is the escrow account.
Okay. Fantastic. So we had one question so far. How would you characterize the housing market at this point, right now?
It's on fire.
It's on fire. Wow.
Had another friend of mine.
With everything we're being told with how difficult COVID is and people being laid off and unemployment numbers and all that, I would not think that the housing market would be on fire. Why is the housing market on fire?
Well, typical houses stand on the market for less than 10 days.
Wow.
I have a friend who just put a bid on a house $25,000 above asking price.
Wow.
So I haven't seen anything like this, even during the best of times.
And what are the reasons behind that? Can you explain that? Are people trying to use these properties as income property? What's going on that during this time that the housing market is on fire? Do you have a reason for that?
Well, usually, you have to look at it this way. Also, people are trying to get out from under mortgages.
Okay.
COVID has hit people differently.
That makes sense.
Some people income has tripled during this time.
Yeah.
While people are suffering. So if you have an opportunity to make a little extra money, whether you're level, you're down or above, you're going to take it. But yeah. I mean, the housing market is unbelievable right now. I'm not in the market. I wouldn't want to be in the market at this time because you're going to overpay for whatever you get.
You're going to overpay. Absolutely. If it's on fire, I mean, you just gave an example of your friend, whoever paid $25,000 over the asking price.
Right. And I told him, I was like, well, let's just see what the appraisal says.
Yeah.
You may get it for a lot less than what they're asking for, but at least you're going to get it one way or the other.
So you can help people with not just refinancing, because that's how I met you, but you can help them with all aspects of the mortgage prospect. Okay. Fantastic. That's great. That's fantastic.
Right.
Okay. So is it now a good time to buy a rental property?
That's a loaded question.
Okay. Explain to me why it's loaded.
Well, number one, yes, it is. It's very, very good. But we're in the middle of a pandemic also. You can have something fully staffed, but people can't pay their rent.
People can't pay their rent.
It's on you.
It's on you. Yeah, exactly.
That's
Yep.
why it's a loaded question. You know?
Okay.
I mean, you have to be able to accept that responsibility of another $1,500 a month without anything else coming in.
Yes. Okay. Fantastic. Great answer. Do we have any other questions, Pastor Sean? No, it doesn't look like we have any other questions. Marvin, did you have anything else you wanted to tell the people?
No, just keep the faith.
Yeah.
And especially with the rental properties, always look at the worst case scenario.
Okay.
Don't look what you can just bring in every month. Look at the worst case scenario.
So look at what would happen if somebody had to get evicted or whatever and couldn't pay. Do I
Right.
have enough savings, or do I have enough set aside to still, because you still have a monthly mortgage payment?
Still have a monthly mortgage payment,
Yeah, okay.
and it's on you. It's not not on your tenants. It's on you.
Fantastic. Thank you so much, Marvin. Mr. Lindsey, I appreciate you joining us, taking your time to come on and explaining to us. We got a lot of comments off Facebook saying thank you. Great information.
Mm-hmm. All right.
Once again, hopefully we can have you on again in the future. Marvin Lindsey, thank you so much. Our mortgage loan supervisor. You can contact him if you have questions at 815-274-0166, 815-274-0166. Once again, thank you, Marvin.
You're more than welcome in anytime, Alonzo. You know that.
Yes, sir. I appreciate that. You have a good day, sir.
You too.
All right. Thank you, our Financial Friday watchers. It was a lot of amazing information out there given to us by Marvin Lindsey. Once again, you can reach him at the number listed below. Don't forget to subscribe to MDM TV for more of our great content. So, for instance, if you choose to watch this show today, just go to YouTube and click in MDM TV and subscribe, so you're always given updates on when new content is presented. Also, if you want to review this, you can go to the Facebook page of Apostle Dr. Marshall Davis or the Chicagoland Christian Center Facebook page. Don't forget to join us Sunday for service at 10 a.m. And then don't forget, Manna Monday is coming up this Monday at 7 p.m. on Facebook Live, once again on the Facebook pages of Apostle Dr. Marshall Davis and the Chicagoland Christian Center Facebook page. Thank you so much for joining us this Friday. We want to say great job with our producer extraordinaire, Pastor Sean Davis. He does a great job for us every week. Thank you, Rhonda. I see you. Thank you, Romel. I see you. Thank you guys for watching. You have a good day. And don't forget, the best is yet to come.